How's it going today, guys? Welcome back to the channel. I hope you're having an awesome day so far. So in this video today, we're going to be talking about my top oil investments for 2022. So we all know that inflation is currently at a 40-year high, which is causing prices to skyrocket everywhere. Now, one of the areas that has been hit the hardest is gas prices, which are now currently at a 7-year high. Now, that might not sound that crazy compared to inflation being at a 40-year high, but when you consider that oil prices were just at a 20-year low in the spring of 2020, that is a pretty quick turnaround. Now, in addition to this, right now, tensions with Russia are putting even further pressure on oil prices due to sanctions that are being put in place. For example, Germany has halted a major Russian gas pipeline called Nord Stream 2, and that has put even more upward pressure on oil prices. Now, while I don't personally believe in the long-term future of fossil fuels, I do think that in the short term, this trend of climbing commodities prices is going to continue. So as a result of this and many other things going on right now in the overall economy, a lot of investors are looking to get exposure to the oil business. So we're going to be covering a few different ways to invest in oil, as well as an oil investment I have made myself. Now, real quick, guys, I did want to mention as well that at the end of this video, I'm going to be doing a full update on my M1 Finance portfolio as usual for that monthly update. Also, I just have to make a real quick disclaimer here that I am not a financial advisor, and you should always do your own research and due diligence on any stocks, etc. mentioned above and beyond this video before making any investment decisions. That being said, let's jump into number one and talk about my personal oil investment in a master limited partnership called Global Partners, or GLP. So as mentioned earlier, I'm really not a huge fan of the oil and gas industry. I've actually never owned any oil and gas stocks outside of this limited partnership, or MLP, which I started buying shares of over the summer. So this company is organized as an MLP, which is very common among energy investments, and this is because they are involved heavily in the petroleum business. So as a result, you do have that tax favorable treatment here of this being a limited partnership, which is only available to certain companies in the energy sector. However, what I like about Global Partners is that you also get exposure to the convenience store business. So Global Partners has a lot of gasoline and petroleum assets, including 21 gas terminals owned by that company. They're also one of the largest branded and unbranded gas suppliers in the Northeast, which is where I grew up. Now I'm based out of Miami, but I still, go up to New York quite a bit. So that's sort of how I found out about this particular company. And they also have nearly 300 company-owned convenience stores, including the new Alltown Fresh brand, which is the reason that I personally decided to initially invest in that company, because I just really like the convenience store aspect of these new Alltown Fresh stores, and I think they're going to do really well in my particular area. Now, above and beyond that, being a limited partnership, you can expect a higher than average dividend yield, but when I first started buying this stock, it was actually over a 10% yield. Now it's currently sitting at roughly 9.2. And I just got my second or third dividend from them. I don't know which one it is yet, but I'm going to show you at the end of this video. But it was another dividend payment for over $1,000, which is pretty mind-blowing. Also, guys, before we get into number two, I just wanted to mention that I also have this particular video available in article format over on my website. That's one of the things I've been trying to do, is take more advantage of that over there. So if you want to read along as you're watching this video here with the information and notes from this video, be sure to check out in the description below the link to my article on my website for my top 5 oil investments right now. Number 2 on the list here is none other than ExxonMobil, trading under the symbol XOM. So this is pretty much the most well-known oil and gas company out there, and it's also the largest direct descendant of Rockefeller's Standard Oil Company. So a few more pointers here on ExxonMobil. They have an ambitious goal of having net zero emissions by the year 2050. In addition, ExxonMobil is involved with the exploration, development, and distribution of oil, gas, and other petroleum products. This company does, as a result, have major exposure to prices for energy commodities, which can be extremely volatile. That's one of the reasons why you don't see a company like ExxonMobil on the dividend aristocrat list, and that's because of the fact that the dividends have had to fluctuate based on those underlying commodity prices fluctuating too. But we are talking about how to get very direct exposure to oil prices, and one of the very best ways to do that is through ExxonMobil, because they have so much exposure to that as their business that they operate. Now, another thing you're going to run into with oil and gas investments is they typically have above average dividend yields. And so right now, ExxonMobil is paying a 4.5% yield. So you are going to have to make a decision about whether or not you want to reinvest those dividends, allowing you to earn that compound interest. And it's probably largely based on how long you plan on holding on to this oil investment. Now, if you do want to reinvest those dividends, you can do that over on M1 Finance, which is the main brokerage platform I use. So you could invest in oil stocks or portfolio of them, and then have those dividends automatically reinvested into your portfolio, back into more shares of the stocks that you own if you wanted to do that. Okay, guys, so coming in at number 3 on the list is another very well-known gas company known as BP. Now, BP, or British Petroleum, is a global gas company based out of London, England. However, one of the key differences between BP and other large gas companies out there is that BP is very largely focused on renewable energies, probably more so than the largest gas companies out there today. They have an ambitious goal of becoming a global leader in renewables, just as they have with oil over the last few decades. So all companies in general, all oil companies have a focus in some way on renewable energies because of the fact that the future of fossil fuels is largely uncertain. However, BP does seem to have the biggest focus on this transition overall. So if you're looking for, a future-proof company, potentially BP has more of that, on the front burner focus getting into the renewable energies. Now, in addition, this company also owns a portfolio of different gas stations, as well as other gas assets such as terminals, and they currently pay a dividend yield of 4.3%, which is pretty standard among these gas stocks right now. Now, if you're looking to do a short-term trade of oil, whether you're looking to do options or anything like that, do keep in mind that's going to bring more risk into your portfolio, but I did want to give you guys an option there if you are looking to do something very short term. And one of the most popular options is number 4 here, which is the United States Oil Fund LP, trading under USO. Now, USO almost exclusively invests in oil futures contracts, and these are common with commodities out there such as oil. And basically, with a futures contract, you have two parties that are going to be agreeing to buy or sell a certain commodity at a predetermined price at a set time in the future. Now, that's all fine and dandy, but you do have to keep in mind that when you invest in futures, you're holding a contract for the future delivery of oil in this case, not an actual underlying asset. So that does bring in a lot of risk to your portfolio. There's also costs associated with futures and other derivatives, so funds like this do have a decay that you should be familiar with. So funds like USO here are not meant for long-term oil investment. It's really primarily meant to basically trade short-term based on the underlying prices of oil. So with USO, United States Oil Fund here, the goal of this fund is to track West Texas Intermediate crude as closely as possible. Now, the goal of this fund is to follow oil as closely as possible through the use of investments such as futures contracts, as well as other financial contracts and swaps and different things like that that are very complicated. So again, this should only be used for short-term trades based on oil. This is not a long-term investment. You don't own pieces of a company. You don't own any equity here. You're merely investing in a fund here or partnership that then invests in futures contracts. Because of that, it is a non-yield bearing investment. It does not pay a dividend, so all of those factors should be considered. And then fifth and finally on the list here, if you don't want to have individual stock exposure, but you also don't want to have, exposure to futures, I did want to mention an ETF in the energy sector, which is going to give you broad exposure to countless different oil and gas and energy companies. And the one on our list here is the iShares Global Energy ETF, trading under IXC. So inflation is pushing up the costs of energy across the board, not just oil. We're also seeing this with natural gas prices and a lot of other commodities. So another option you have for oil investment is investing in an energy ETF, which is going to own dozens of different stocks or more, giving you diversification across multiple companies. Because you could invest in a particular oil and gas stock, and even if the prices of oil and gas skyrocket, if that company isn't doing well, you could actually have that investment perform poorly. Whereas if you were in an ETF, even if that one particular stock wasn't doing well, you own many different other ones to offset it. So IXC gives investors exposure to companies that produce and distribute oil and gas, and there are actually 62 individual holdings within the fund, including companies like ExxonMobil, Chevron, Shell, and more. Now, do keep in mind this is an ETF, so they are going to collect a management fee, which is 0.43% annually, and the current dividend yield for this fund is sitting at 4.2%. Okay, guys, so that's going to wrap up my picks here for oil and gas investments. Now we're going to jump into my computer for my monthly update of my M1 Finance stock portfolio. Okay, guys, so here we are inside of my M1 Finance stock portfolio, and we're pretty much at a similar value to where we have been over the last couple of months, hovering between 90K to around 100K. So as you can see, I still have these same four positions here, which is Global Partners, Genius Brands, Dave & Buster's, and then a little bit of Verizon. Now, I did end up earning another sizable dividend this month from Global Partners, so let's go ahead and cover that now. So this dividend here ended up getting paid out in two separate dividends, one in the amount of $492.30 and the other the same day in the amount of $726.57. So that's somewhere around $1,200 for that quarterly dividend, and this is actually the third dividend I've earned from GLP, which is pretty awesome. So going back from this one, the earlier one I earned from them down here was $1198.04, and then if we go to the other page here, we can see the very first dividend I earned from them was $943.62. So it's also awesome to be seeing those dividends increasing quarter over quarter, and I've now made probably over $3,000 in dividends over the last 3 quarters from my roughly 50K investment into Global Partners. I also earned a small dividend here in February from Verizon in the amount of $38.83, and then of course Genius Brands is my more speculative small cap investment, so they do not pay a dividend, and then Dave & Buster's, in addition, they also do not pay a dividend. Now, I was up more on Global Partners last month based on where the market was at, but I am still up with an unrealized gain here of about $1,600 on GLP. Besides that, Dave & Buster's has actually recovered quite nicely here, and I'm only actually down 2.8%. I am down about 7% in Verizon, and then of course in my speculative investment here with Genius Brands, I am down roughly 50% on that in the short term. Now, in terms of what's going on here with Genius Brands, it's pretty much what's going on with small cap stocks across the board, and that is that they are just getting absolutely shorted like crazy. So just to show you guys this, I actually have a subscription here to Ortex. If you're looking to do, in-depth research on stocks, it is probably worth it, but, it's a couple $100 per year, but I did want to shout them out here since we are using that service. But anyway, looking at this here, IWM is an ETF, which is the Russell 2000. And this is 2,000 companies, and it includes, obviously, a list of a lot of smaller companies in that list being an index with 2,000 individual stocks. Now, what's crazy about this is with an index fund, this is going to be stocks from all different industries across the board. But if you look right here, you're seeing the current short interest on this, which is of course estimated, but we are going off of Ortex data here, is over 40% right now, which is absolutely insane. So 40% of the shares that trade of the free float are apparently shorted right now of just an index fund, which is literally small cap and mid cap stocks across the board. So I honestly think that a lot of what we're seeing here with these small cap stocks is a result of this insane amount of shorting. And I don't know what the reason is behind having so much short interest on these small cap stocks, but there is a lot of hedging going on in the market. But at some point, some of the short interest does have to come off, whether it's a result of, prices moving higher or prices moving lower, which could affect the collateral that they have. But anyways, we have been seeing just crazy short interest among small caps. I mean, literally pick any small company out there yourself and look it up, and I would almost guarantee you it's hard to find a company out there right now, with a market cap under $10 billion that hasn't been absolutely destroyed in the last couple of months. But nonetheless, I like Genius as a long-term investment, guys. I'll put my whole report down below, my due diligence on the stock. It is about 5,000 words, but it walks you guys through my whole thesis and why I have over 100 grand invested. And I actually just bought another $5,000 worth of shares at the 88-cent range a couple of days ago. So I haven't sold any shares. I have bought some options and also some more shares at this very low price range currently. So just to keep you guys updated on that, since I have been getting a lot of questions. Now, another thing I like to pay attention to here is failure to delivers here with Genius Brands and other heavily shorted stocks. And this basically has to do with the settlement time for shares when they are purchased and sold. And brokers actually have, a set period of time to actually go out and locate shares after they are traded. So believe it or not, when you actually transact shares in your brokerage, you're essentially given an IOU initially, and then in usually a 3-day window that is exchanged for a legitimate share. An FTD, or a failure to deliver, is when a broker is unable to actually find a share to give to you. So as a result, an FTD is issued. I always pay attention to upticks in FTDs and if that corresponds with a price moving downward. And what we can see here is that it was pretty quiet after June here, where there was a huge increase in FTDs, which pushed the price down, which does make sense if they were potentially having a huge number of shares that were unable to be located or delivered. And then we see down here where the price kept going down even further, a huge uptick in the number of FTDs. So this is just another important metric I'm looking at. And if you personally have invested in any stocks lately that have just gone down like crazy, I would encourage you to pay attention to FTDs and overall short interest on that stock, because that may be actually painting a larger picture of what might be going on for that company. Now, in my opinion, I see 3 major catalysts right now for Genius Brands in the next few months. Number 1 is, of course, the launch of Shaq's Garage, which is going to be their next big show. Obviously, they've already had Stan Lee's Superhero Kindergarten, which was a pretty big success starring Arnold Schwarzenegger, but Shaquille O'Neal, I think, is still far more relevant with younger people today, and I think this show might actually do quite a bit better. So this is coming out in spring of 2022, so I am super excited about the launch of their next show here, Shaq's Garage. And the other thing, too, that's important is they have their hit show, Rainbow Rangers, which is now on Amazon, it's on Netflix, it's on a ton of different platforms. But what a lot of people don't realize is that season 3 of Rainbow Rangers is going to be exclusive to Cartoon Channel, at least for a set period of time. So anybody who's been watching that show and getting interested in the series is eventually going to have to transition over to the Cartoon Channel streaming platform in order to access season 3. So I think that is also a good potential catalyst, but that's going to be quite a bit in the future when season 3 is actually launched. So the second catalyst here is Excelsior 2022, which is related to Stan Lee. So obviously we mentioned Stan Lee's Superhero Kindergarten. Genius Brands, through a joint venture with Powell, does have control of the Stan Lee trademark. And one thing that is quite interesting is what was mentioned here in an earlier annual letter from the CEO, Andy Hayward, regarding Excelsior 2022. And if you look here, it basically mentions how there are going to be 3 major projects they're going to be focusing on initially with their Stan Lee trademark. So you can look into this more yourself if you want on the first 2, but the main one I want to talk about here is Excelsior 2022, because I think this is also a huge potential catalyst. It says here, December 28th, 2022 is the date of the Stan Lee Centennial, where he will return in AI, artificial intelligence form, and activate an embedded world of superheroes to save the Earth. So I think this could be a pretty big deal. And also, there was something that people have pointed out in one of the recent cameos of Stan Lee in WandaVision. Right here, you can see the dates 12, 28, 22, announcing the Centennial. So I am definitely looking forward to hearing more updates about the Excelsior 2022 project, but this could be a huge deal for Genius Brands, depending on whether this turns into a full production movie or what this actually turns out to be. And then third and finally, we did get the announcement that Genius Brands is launching a paid subscription service on April 15th, 2022. So that's coming up here pretty shortly. And so one of the main problems with Genius in the past has been that lack of revenue. And at this point, I think that is a price point where most people who are using the streaming platform regularly for their kids or whatever would probably be willing to pay that to get the extra bells and whistles of the Kidaverse, but also, more importantly, to remove ads from the platform. So I'm excited to see, probably in their quarter 2 or quarter 3 earnings later this year, just how many people they get signed up at that $3.99 price point. Also, guys, if you're looking to get started with investing in the stock market, I do have a completely free 30-minute training down in the description below that walks you through step-by-step how to get started with M1 Finance. So be sure to check that out at ryanoscribner.com/M1-training if you want to learn more about that. Anyways, guys, that's going to wrap up this video. I hope you enjoyed it. If you made it to the very end, please be sure to drop a like on this video and leave me a comment about what you think about these particular stocks and your thoughts in general about investments in oil as a whole. Like I said, if you want to check out this full article, that's going to be linked up in the description below over on my website, ryanoscribner.com. I also have an affiliate link for M1 Finance if you want to check them out as well. And I have that completely free 30-minute video training that walks you through step-by-step how to get started with M1 Finance. But thanks so much for tuning in, guys. Make sure you subscribe and hit that bell for future notifications. And as always, I hope to see you in the next video.